If you have any questions, email support@daytradetowin.com. If you like what you learn here at our YouTube channel, remember to subscribe to the YouTube channel, Day Trade to Win, and I'll see you at the next mentorship class starting June 2nd, 2020. Is going to be pretty much equal to the ATR of the last four candles. So that's what the scale is representing. It's representing the distance. Some markets are in points, other markets are in ticks. The currencies, for example, are in hundreds. Some markets are in tenths, but it's really all the same. It's not that difficult to understand what it's saying. It's saying that the last four candles have moved 3.5 points, which is now these four candles. And so this candle, you can expect it to move this distance. Now the distance could be up or the distance could be down. And so this doesn't tell you direction, Jay. So I'm not going to expect it to go down 3 points or up 3 points. It's just the range of the candle from high to low has that expectation. And why that's important, you got it, Jay, you're welcome. So why that's important is because if you enter into a trade and you're wondering what's the stop and what's the target and what can I expect out of the movement, this at least gives you a direction. I can expect the distance of this candle to be roughly 3.5, 3.75 of a point, which will then lead me to say what's my stop, what's my target, and so on. Okay, Al, have a great day. Thank you. So what we have here is the market continuing to move lower, and right now, as an example, the market moved to this low right over here. And let me just add here the Atlas line here, just to give you an idea of the Atlas line. Some of you want to see the signals, so I want to show you the signals, whether they're good, they're bad. So the Atlas line here is this line that's beginning to plot right over here. Okay, this pink line that's there right there. See if you can see that there. And so the purpose behind the Atlas line, some of you are using it as a filter, some of you are using it for the signals, some of you are using it standalone. If the market trades above the Atlas line, it's a long trade. Or long trades, or you want to be a buyer. If the market trades below the Atlas line, you are looking to sell it. Now, you just can't sell it at any specific price, or you can't just buy it at any specific price. There's rules that go along with this. But as long as we know that anything below the Atlas line, your opportunity is to sell it, and your opportunity is to buy it when it's above the Atlas line, then we can formulate some rules to be a buyer or to seller. Robert says here, in spite of the lower volume, is it to use the ATO or trade scalper in the evening after 6 p.m.? Well, you have to have some type of volatility, Robert. So with the afternoon session, the Globex session, currently the volume is actually healthy and very good. It's possible. So for right now, the volatility that we have during the after hours is fine. You can trade with it. When the market is too slow, let's say that in the future the market becomes too slow to trade in the afternoon, that's when I would say look at the ATR here. Anything less than 4 ticks, you shouldn't be trading. Okay, you shouldn't be trading. So it's possible now because the volatility is high, but you have to kind of expect that the volatility will change. It will be slower, it'll be faster, and you have to adjust what you do based off of that. All right, let me explain to you this signal here, this pullback trade signal that we see here. So this pullback trade signal on the Atlas line is the P's that you see here. So you see that the market is pulling back and coming back down. So there's a price action rule based off of this pullback. The first thing is that the market is trading below the Atlas line. So I know that I want to focus on short trades. I don't want to enter here right at the low of this. I want to wait for the market to pull back and then get me in. So when these P's plot, this candle will be the entry to go short. And now you see an S here. So this is called a strength trade. And this signal is now telling me that there's strength in the market to the short side. I should be a seller. Now the S doesn't mean sell. The S means strength. So these are two separate signals along with the Atlas line short, the pullback, and the strength trade. So those are three separate signals that the Atlas line produces. And you can turn them on, you can turn them off, you can change the colors, you can do a little bit of tuning to it, but as simple as I'm going to make it is that when you see the P's, this is considered, and it's telling you the market's pulling back, and now you should go short. When you see the S's, the market is giving you strength, in this case, to sell it because we're below the Atlas line. Let me know if anyone has any questions on that. Robert or Bill or Diane or Glenn. So those are the signals. And the signals here are represented by the Atlas line here. You see that I have to place the start of the market open, so 9:30. I'm Eastern Standard Time, or Eastern Daylight Savings Time now, New York time, 9:30. I have the main signal on. It also offers bounce trades. I have this signal off because sometimes it clutters up the chart, but if I wanted to turn on this Atlas line bounce, I could. And now you're going to see um, signals when the market bounces off of the Atlas line. So it hits the Atlas line and bounces off of it. You'll see a signal for the Atlas line bounce. The pullback trades I have turned on. The strength trades I have on. The alert file is, I'm not sure if you guys can hear the doorbell sound when it plays. Like a doorbell, right now the doorbell sound kicked in. So this telling me to go short. And this is the trade scalper indicating to go short. Right, that signal is the trade scalper. The font size and the bars back and the ATR filter, these are all things that are customizable. If there's any signal that's too slow, you can say, I don't want to see a signal when the average true range is less than a point or 2 points or 3 points, or how many ticks you want. So that's what that's for. Everything else, the colors and things you can change if you'd like. And that's for the Atlas line. Okay. So the trade scalper had a signal here to go short, 29.9250. And if anyone didn't get in at 29.9250 when it triggered, when it happened, please either get in at a better price, but don't chase the trade. If you chase it and get a bad fill, then you may have a problem. Okay. So now you see the S's. The S's are showing you strength in the market, and that's again a sell strength signal. Questions? Anyone have any questions? Let's talk a little bit about overbought and oversold. Overbought and oversold is this situation where the market moves in a very strong and very fast distance, and you see the market moving in a short amount of time with large candles. When you see a large candle, consider that to be overbought or oversold, whether it be a large green candle or a large red candle. The reason why I say that is because whenever the market makes such a large jump here, you can definitely see that at the top or at the bottom of these large candles, it stops. It typically doesn't continue. So when I look at a large red candle or a large green candle, the first thing that I think about is it's going to reverse at some point. It's not going to continue. So just take that into consideration. I never look at strength in the market as large candles. So one large candle is typically useless. It's a false breakout. Not all the time, obviously, but I don't want you to get lured into it and say, when I see a large candle, it means to sell or to buy. Be careful because it may be the last push of the move, and then the market may reverse from there. So these type of price action candlestick interpretations, I guess you would say, I don't do any type of candlestick interpretation, but when I see large candles, I consider the market overbought or oversold, and I'm hesitant to just jump in the same direction. Okay, and maybe a perfect example of this would be a candle like this. When I see a big green candle, this reminds me of just profit taking, where the market and all these traders who have sold and sold and sold are not making or taking profit, and it creates this big candle. But I don't necessarily believe it's going to continue. And so that's where I stand. I don't think large candles offer that opportunity of a continuation. It's usually a last hurrah of movement. So Jason says here, trading based on the 1 minute chart. So the problem, Jason, isn't that the 1 minute or the 5 minute. The problem is the volatility, the ATR. So if you look here at the ATR, it says three, and now it says 3.25. If I change this to a 5 minute chart, a 5 minute chart will be much higher and it will be above 5 points. So the problem is that I don't want to risk a lot of money with stops, large stops. If the ATR is within 1 point and 5 points, it's fine. But if it's above 5 points, it becomes too high of a risk. So for example, with the hundreds of videos I have out there, the market on a 5 minute chart was between 1 point and 5 points. So this is a 5 minute chart here where you're looking at, and you can see that the ATR is at 7.25. So it's hard to trade at this type of volatility on a 5 minute chart. Whether the seven, it's because it's the 7.25 points. That means every candle, this candle, this candle, this candle, it's moving from high to low 7 points. So the problem is that the market is moving from high to low 7 points. That's a huge stop. That's the reason why during these times that we're seeing now with higher volatility, the way that we adjust that would be, well, I don't want to risk a lot, so I'm going to put the chart into a 1 minute chart where the ATR is between 1 and 5. Right, so I'm just dropping it down to a 1 minute chart to keep my risk and to keep um, my stops and my targets in line and check. That's the reason. That's right. Diane says here, would you fade on a switch to long here? I would not, and not yet, Diane, because since the candles and the price are still below the Atlas line, so this is the Atlas line, I want to wait until it crosses above the Atlas line. And the signals, just so you know, in order for the signal to be generated, the main signal on the Atlas line, there has to be two consecutive candles to close either above or in this case below, right? So here the Atlas line short to close below the Atlas line. So before I decide to go long, right, because this could just be a big pullback, before I decide to go long on the Atlas line trade, I would rather see two consecutive candles closing above, and then it becomes more of a stable long opportunity. We could actually see the market. This is the Atlas line right here. I'm just going to extend it out. We could see the market hit the Atlas line and bounce off of it. It happens very frequently. So I'm also concerned that it's going to hit the Atlas line, acting as support and resistance, and bouncing off of it. So that's another reason I may not want to go long just yet. I'd rather wait until there's evidence that we're now moving beyond it. And if you remember earlier in the presentation, I said markets love to test where they've been. So you see the market has this low at 29.8950 or quarter here. There's a great opportunity that the market will come back down, at least maybe not go through it, but at least try to test it. And there's another reason why I don't want to jump in to the long side just yet, Diane, if that makes sense. Okay, so what we have here so far today is the short on the trade scalper here. We had a long signal here on the Atlas line, which obviously this trade did not continue. As soon as it comes back down below the Atlas line, it's out. You're out of the trade. So this is a trade that didn't work, long on the Atlas line. Then we have a Atlas line short here to go short on this candle here. And this candle here, pullback trade to go short, strength trade to go short, short on the trade scalper, strength trade, and now we're waiting. So you can see there's a lot of signals. I definitely don't want you to just trade and trade and trade. I think 4 trades a day, 3 trades, 5 trades a day, I think that's within reason. But if you're trading, let's say 20 times a day or more, and you're not really seeing a result, right? You're not really seeing a good result out of all of those trades, I think that you may have to scale back. The more we trade, the more risk that we're subjecting ourselves to. So that's another reason why I rather trade less and trade and pick and choose the signals that I take over just trade and trade and trade because that's not going to help you. So Jason asks the first 3016 how to trail a stop. I actually have, Jason, a few videos on trailing a stop. Trailing a stop is based on, if you want to learn more about trading, visit daytradetowin.com. Subscribe to the Day Trade to Win YouTube channel, the next mentorship class where we cover all of these methods with lifetime licenses for the software.